Hello everybody, this is Prince. It's 10th of October 2017 and this video is all about crude oil technical analysis. Uh, like always, we've got a 5 and 8 and 50 exponentially moving averages with awesome oscillator at the bottom. Now the rule is when the awesome oscillator is curled with green histograms above the zero levels, this is showing us that the momentum is towards the upside, and we want to really ensure that the candles are also closed and price is trading above the moving averages. So let's get let's get started. So let's zoom out a bit. Now you can see for quite some time we have a consolidation going on crude oil. This is almost a nice decent trading range, and the strategy is going to be really very simple. It's simple, but it's emotionally tough. So you should be psychologically and mentally very well conditioned, otherwise this market can be really pain in the ass. So we really want we don't want to buy the highs, okay? We want to short sell the highs, but what we want to do is we want to buy the pullbacks. We have two options. Once the price falls back towards the moving average, we want to take a buy entry, or what we want the price either from the current price to fall back towards this support level right here, or to the bottom of this box, okay, around this area, and look for reversals and W patterns to start trading towards the upside. That's how the strategy is really going to be like. So this is how I would trade. But now seeing this on the daily chart is really going to be kind of a challenge. So you can also use the 4-hour chart. Let's switch to our 4-hour chart. Now, what's the good news? Okay, there is a possibility, as per my analysis, that the crude oil market can break the highs. Now, why do I say that? Because you see dollar index. Where is our dollar index? Let's take the dollar index chart out. The dollar index. Yep, that's the dollar index. Now keep in mind, when the dollar index is trending towards the downside, the currencies and commodities are always, or most often, they're going to start trending towards the upside. So do we have the dollar chart open? Chart window. That's it. Yep. So can you see? Let's go to the daily chart. Dollar has been trending towards the upside, sorry, downside. This is our downtrend line. You see that? Okay. Now when you see that, you go on the crude oil daily chart. Let's open the daily chart. We can see that the crude oil has been trending towards the upside as well. Can you see that? So what should we do? So what's the plan? What's the plan? Let's go to the bottom line. Now we have targets. Of course we have a target. We are trading this to make money, right? So let's clean the charts. Go to our default template. Okay, first target. One of the first best targets is this high range, 55.50. Okay. Second target is gonna be 62.40. All right. If you wanna trade short term, if you want short-term targets, you got short-term targets as this high. Okay. Now what to do here? This is what we're gonna do. Let me go to the 4-hour chart now. We want price to shoot up towards these levels. Okay. Form an M pattern, short sell from there. You're going to short sell, take towards the downside, come towards the moving average, bounce back up. If moving average fails, you want to come towards these support areas, key support areas, the one which we have around this 49 and around 45. Come at these good levels, bounce back, or fall further down. Okay, so now here is something you really need you really need to have a nice training mentor, training education, so that you can make a good trading decision. The money management, and I should say the trading money management and trading risk management is what's very important and comes into play. What do I mean by this? Now let's see, we have a key resistance at 52.88, right? Another key support could be at 42.01. Sorry. Now you can decide, let's say if the current market price is 50.91, what if I fall from 50.91 at 42.01? I can decide what's my floating loss going to be? Again, not confirmed loss, floating loss. I can decide, because I'm using leverage, I can decide it can be 5%, 10%, 15% of my equity. And what happens if I'm just risking 50% of my equity? The price would go down and I expect it to bounce back up from this area. I can take further risk. Look for the W patterns or reversal candlesticks coming up. Okay, and take this towards the upside. I could recover my loss using dollar cost averaging in a professional way. I can gain some profit from the bottoms, plus recover losses at the top. Okay, so I hope the video helps. Please do check out the disclaimer in the comment box, and there are some referral links that I feel can add value to your financials. This is Prince. Have a great trading week. I wish you a lot of success and happiness. Bye bye for now.